I left at 16, my head of year, telling me that I'd be a failure all my life.
You've built and sold a property finance brokerage. You've built a property portfolio. You've built an award-winning development company called Broadwinning Homes.
And my entrepreneurial skills started there as well, because again, I wasn't earning very much money. It was about £3 a week. The business opportunity was fantastic. In fact, it was so good, they wanted to take my franchise back from me. I was earning over £1,000 a week. If we were buying property, literally, that was worth £100,000 for £80,000, we'd remortgage it the same day and pull all of our money out. Where I'll buy something, I put literally none of my own money into the deal. Option agreements were literally just for £1, I can control the property and get the benefit. We made over £1 million just on the actual flip. A project that should have produced over £1 million profit broke even. Development doesn't come without its own health and financial risk warnings. They're going to get burnt.
Passive income, it's a myth in property because ultimately there is no such thing as passive income, and there's always some kind of element of some sort of hands-on.
People used to find it very attractive. With the rules and regulations that are coming in now, we're being boiled like a frog. How do you boil a frog? You put it into a cold saucepan and turn up the heat slowly. I'm selling a lot of my property. If you think the cost of good advice is expensive, try the cost of poor advice, bad advice, or even worse, your own advice. That's what's happening. They announced it, that by 2028 to 2030, we will have central bank digital currency. Most people have no clue what it is or don't understand what it is. Cash is important, and whatever you do,
Before we get into the episode, I just wanted to say that Property People has been going for over 5 years, and I've come to know that over 71% of you still haven't hit that subscribe button. So please, I ask a small favor. If you could take a moment and hit that subscribe button, I'd be ever so grateful. And in return, I assure you that I will do everything in my power to make this podcast and YouTube channel the best it could possibly be. We'll get bigger and better guests, and we'll go more places together. Now, back to the episode. Hello, everybody, and welcome to another episode of Property People. Today, I am joined by Mr. Immanuel Ezekiel. How are you today?
I'm good, thank you. Very good.
Very good to have you. Thank you very much for coming. We've known each other a number of years now.
We have.
And I recently, the last time I saw you, I think it was at the Property Investor Awards towards the end of last year. You've had an illustrious career, may I say. You've built and sold a property finance brokerage. You've built a property portfolio. You've built an award-winning development company and called Broadwinning Homes. And now you're supporting others on the same journey as well. And we were just talking before we started about being a little bit of a man of international mystery as well.
Yeah, I think that probably sort of summarizes it.
Well, good. So there's lots to cover and lots of value, I think, to share with our guests. But where I always like to start is, who were you at school? What type of person were you? Because it's always interesting that people do these magnificent things from here to there. And did you always have that vision? Were you always industrious? Were you always entrepreneurial? What kind of person were you at school?
I certainly wasn't academic. I didn't like school at all. School and I didn't sort of match. I was entrepreneurial. I think one of the reasons for that is I grew up in quite a poor background. My mother was the school dinner lady. My dad worked in an abattoir. I was the youngest of 4 children. We didn't have any money or pocket money, so I had to find different ways of generating my own pocket money and started off washing cars.
Very good. I've done the same when I was a kid growing up in the Merryoaks property estate in Durham. And sometimes those humble beginnings help give you that drive, I find. So did you leave at 16?
I left at 16. I left without any qualifications, and my head of year telling me that I'd be a failure all my life. So passing comment from my school teacher. Luckily, I didn't listen to his comments and his limitations.
You know, when people tell you that, I think there's a crossroads, because some people that drives them on and says, I'm going to prove you wrong. And some people say, oh, you're right, self-fulfilling prophecy. What do you think? Why do you think some people react to things differently?
Good question. And people often ask that question. And I often give an analogy. You have twins whose father is a drunk, an alcoholic. They both grow up. One son says he's an alcoholic. He says, what do you expect? My father was an alcoholic. The other son is completely teetotal. He says, what do you expect? My father's an alcoholic. Same situation, different interpretation. And we all interpret things in a different way. It's how we internally digest. So as you and I are talking now, there's going to be an internal voice talking, people listening. They'll have an internal dialogue. They'll be hearing what we're saying, and they'll be internalizing it, and they'll be their own questions, their own words in their head will be saying, do I like him? Do I not like him? Does it make sense? That there are always questions that we're asking how we interpret things. We all interpret things in a different way.
And there's no kind of, I don't think there's an exact science as to why that ends up being the same way. But you're right, two people born in the same place, same time, they can have completely different interpretations and lead their lives in completely different ways, which is a mystery. But for you, it's worked out well, which is the good news. So at 16, when you were told that you'll amount to nothing, what was the next step for you?
To be honest, I had no clue what to do when I left school. My brother, who's a bit older than me, 8 years older than me, he had his own bathroom company. And he came up with an idea to say, why don't you study to be a plumber, heating engineer? I'll design it, you come along and install it. At 16, that sounded like a good idea. I got myself onto an apprenticeship with a company called Humphreys in Glasgow. They don't do many apprenticeships now in that industry. And I trained as a heating and ventilating engineer. I did a 4-year apprenticeship, 2 years as a heating and ventilating engineer, 2 years as a gas and arc welder, working on many different building sites. And one of the first building sites I worked on was the new Borstal wing in Felton.
Okay.
And that's where I started my life off, or my working life off. And my entrepreneurial skills started there as well, because again, I wasn't earning very much money. It was about £3 a week as an apprentice. But what I did know is all the people needed to eat. So I would go and get all the sandwiches orders. I would go and get their orders. I would make my small margin between the cafe and the people ordering. And at the same time, a friend of mine was selling jewellery. So I used to take jewellery on a regular basis and sell jewellery to the people working all the different trades for their spouses.
So you very interesting. So, I mean, £3 a week. I remember I was doing minimum wage when my first job was like £3.81 an hour. So £3 a week is incredible.
Shows you my age.
Yeah, the delivery. So you're charging effectively like a delivery fee, just by charging that margin, saying, look, I'm going to provide an extra service to you. I'm going to bring it to your seat.
Well, I made two fees. I got a margin from the cafe by taking a bulk order, so I got them to give me a reduction.
Reduction on that side, very good.
And then I actually got a margin from the people I was actually getting their sandwiches for at the same time.
And was there anybody saying that this is what you should be doing, or was this instinct?
That was just instinct. It was need for money. Waking up at between 5 and 6 o'clock every morning, travelling for 1.5 to 2 hours every day to work and back again. If you can imagine the journey from Stoke Newington to Felton at 16, which is almost 50 years ago, transport wasn't quite the same as it is today.
Yeah. Unbelievable. And now, so you're doing that, and you're making a little bit more money than the money that you're making just by getting your hands dirty on the tools.
Making a lot more money.
Making a lot more money doing that.
Yeah.
And was that a light bulb moment? Like, wow, why am I spending all my time getting my hands dirty doing this when I could be maybe doing something different?
I was learning a skill. I was learning a trade. I didn't really quite understand the system and the process. But at the same time, I had another opportunity that got presented to me just before I was 17. And a friend's father was bringing in then roller skates into the UK.
From the US?
Just from all over the place. Okay. He was bringing in tens of thousands of these roller skates. So I thought it might be a good idea for me to sell it. So I made my own stall from pipework and wood.
Welded it together.
And wood lying around. I had it so it could be folded because you had to get it into a van. And I started selling roller skates on a sale on return. I sold some other bits and pieces, but I was actually making much more money from the market stalls than I was from both the selling of food and making that margin.
So, and they say that we're doing the market trades. I was in Waterloo Station yesterday, and there was some guys doing raising cash for cancer, prostate cancer it was specifically. And they're approaching people and trying to capture their attention. And then what's the first thing that you say to be able to engage? How do you build rapport? They say it's like one of the best ways to actually learn one of the most important skills in business, which is sales. Did you find that was, going around washing cars, were you knocking on doors, probably with a bucket and a sponge?
Very much so.
To now building your own stall. All of this every single day. Being a people person.
We learn by association, in the market stalls, you see the guys that do really well and the guys that were selling really well, the gimmicks they were selling, one of them was the window cleaner, where you actually put the window cleaner both sides of the actual window and cleaned it at the same time, and watching their patter and how they attracted people gives you an idea of how you approach people, different way of sparking their interest. Just approaching people in a normal way to make a sale doesn't work. You got to grab their attention in a different way.
And so you basically had the education being right firsthand, right in the thick of it on the trade floor effectively. It's interesting because we talk about work from home these days as well, where people cannot be in the office, learning from the more experienced veterans of how things should and shouldn't be done, what should and shouldn't be said. So you've had that first-hand experience, which is amazing. So going kind of fast forwarding to how did you get into property? Because that's going from all these different things into property.
It was a journey. So I bought my first property at the age of 19.
Okay.
Where everybody told me I was crazy to do so. I didn't have a wriggling at the time. I'd just joined a company called Harp Heating, which was selling central heating. So as soon as I finished my apprenticeship, the very next day I left. I never really worked as a heating and ventilation engineer or gas and arc welder after my apprenticeship.
Why was that? Because
it just wasn't for me. It taught me a lot of things about property, about building, about how to put things together. But I just knew I just wasn't aligned to do manual labor.
It's interesting that you got to the end of it. So some people quit halfway through when that. How come you got to the end of it and then decided?
Because it was a task I had to do. And I had to do it well, and I finished with a distinction. It was something that I wanted to accomplish, but I knew I just would never do that. I wasn't cut out for it. And then I got a job for a company called Harp Heating. That was through a friend of mine. And it was selling central heating. I'd already studied, so all I was now doing was implementing what I knew. And I modelled that person. He was the top salesman in that company. I followed him for about 6 weeks. When I went out for the first time myself, I actually was the top salesman that week and stayed in the top 2 throughout duration I was with that company, just from modelling, which I didn't understand at the time was modelling. I just copied what he did, adapted my style to it slightly, and was able to sell very successfully the central heating. I then moved from that company to another company called Harp Heating. There was just one letter difference between Sharp and Harp, which was pretty good. And they asked me to take a franchise with them, which I did. I started to get quite good with figures at that point. They didn't realise the deal that they were offering me. I was able to negotiate an absolutely fantastic territory, but the commission and the override based on how much business you did, I was earning over £1,000 a week.
Wow, going from 3 to 1,000 suddenly.
And then it went up to something like £4,000 or £5,000 a week. The business opportunity was fantastic. In fact, it was so good. They wanted to take my franchise back from me after the first 5 years.
I can imagine.
I was clever enough or lucky enough to have taken advice. I had an insurance policy for litigation. I took them to court. I won. I got one further extension. By that time, I'd already been on my 3rd or my 4th property of just buying and selling and making, not really understanding about property. There was 1 or 2 other franchisees there. One of the franchisees and I got together. His name was Melvin. We then said, well, we want to do something else. We don't want to be dealing with customers and stock anymore. What should we do? We said, well, let's look at property. So we got into property. We bought some properties together. And at the time, we didn't know what we were buying, but we just stumbled across a formula. The formula was finding developers that are coming to the end of their development, having 1 or 2 plots that finish, which are called stock plots. We negotiated at the time 20% discount, bought those, on 2 different developments, one in Finchley, one in Barnet. And we ran out of money, like most people do.
Yeah, standard.
But we liked it. We had good cash flow. So we started on a journey of learning how to buy property without having a lot of money.
And what decade is this?
So I'm 63. It's about 30 years ago. So 1990-ish, 1990s.
And so you're buying these, what do you call it, stock
plots.
Stock plots.
So when a developer builds, so if you can think of Barrett, Wimpy, they have a show home.
Yeah.
The show home is left to last. They sell all of the development, and the last few on any development, even for developers like myself, small developments, our profit is in the last few. But for a large PLC company, they have different targets to meet. They have different sales targets to meet different times of the year. So if you know what they are, you know when to actually approach them. You can get significant discounts off of their list price.
Got it. And so you go in for those, and then you'd flip them or just hoard them into a property portfolio?
No, we kept them into property portfolio. At the time, we were looking to build our own pension. We didn't have a pension. It was a way of getting income now and creating long-term wealth through the increase of property value. So we bought and we kept. That didn't mean as our journey continued that we didn't start to sell as we learnt different skills, but the initial intention was to buy and retain.
And this was through the 90s. So then, and were you doing refurbs? Because you've obviously got a little bit of, you're good with your hand and stuff. You can do some welding, etc. And your heating, were you putting it, installing all this stuff and adding value?
So we didn't start with refurbs. We started with new build because they were good to go, ready to go, easy to apply money. We didn't have that much cash. As we progressed, we started to buy ex-local authority properties that need for a 1-bedroom convert into a 2-bedroom. We cut our teeth on small stuff first, but yes, we certainly did refurbishment. And being in both heating and the bedroom business, we were dealing with lots of different trades, so it was actually relatively easy for us to get the properties refurbished.
And because you were doing so well with the franchising, were you buying all the properties cash, or were you using any kind of funding and finance? This episode is sponsored by Merryoaks Property Finance. Merryoaks Property Finance is a finance brokerage, and we specialize in property finance for investors, developers, landlords. So anything from buy-to-let, bridging, development, commercial, HMO, short-lets, hotels, the whole 9 yards, we can support you on whatever funding requirement that you need. If you have a funding requirement, please do reach out to us in the show notes, and I hope to hear from you soon. Now, back to the episode.
We used finance. Again, didn't really know much about finance at the time, other than getting my own mortgage. Had dealt with a couple of brokers, and they said that they could get us finance. And at the time, finance was pretty good. The good old days was you get 85% loan to value as opposed to 75%.
Yeah.
There was also other loans at 90%. So over a long period of time, the lending market has changed quite dramatically.
So you're building up this property portfolio, and you're doing well overall, using the capital that you've got, making it work as hard as it can. What was the next step for you? Because at some point you ended up setting up a finance brokerage.
Well, that was the next transition. So when we knew that we were coming to the end of our franchise, Melvin and I were approached by a guy called Andy Barton, who was working with Allied Dunbar at the time. He was approached to create a new sales force for a new mortgage company that was coming from Australia to the UK. And at the time, all mortgages in the UK were calculated annually in arrears. So it meant if you had a mortgage payment of £1,000, the interest wouldn't be deducted until the anniversary. So you paid £12,000, the mortgage would only be calculated at the anniversary. They came in with a new concept to charge interest on a daily basis, and linked to it was a current account mortgage. So if you had a £100,000 mortgage, you had £10,000 in your bank account, you'd effectively only pay interest on the £90,000. That doesn't sound like a huge amount, but they also had a calculator linked to the mortgage, what's called a CAM, current account mortgage calculator. And because I'm quite good with numbers and understanding, I spent 6 weeks really understanding how to manipulate all mortgages. I became, if not the world expert, the UK expert on how to manipulate this mortgage so anybody could pay off their mortgage 5 to 7 years early, save anywhere between 20 and 50,000 pounds with interest without earning any more money. And on the back of that, Melvin and I created the company called Mortgage Savings Centre, which was at the time one of the largest mortgage brokerages. We had over 50 brokers, 100 staff, and understanding mortgages from an investor's point of view, a broker's point of view, an investor's point of view, and an underwriting point of view, I was able to be very, very creative. We were buying property, literally, that was worth 100,000 for 80,000. We'd remortgage it the same day.
Yeah.
And pull all of our money out. My only mistake was not buying enough.
Yeah, you could have bought more.
A lot more. Well, I made a lot of mistakes. That's one of the mistakes I made.
You can imagine.
Yeah.
It's interesting, actually, yeah, because always people talk about the success and we talk about all the highlights, but there's a lot of mistakes or hurdles that you've jumped along the way that you probably haven't quite made it over. And one of those things that I get asked it regularly, we got these property networking events and stuff at the end, like, what could you tell your younger self? And it's like, just buy more property and hang on to it. But that's a common one. So the fact that you built this brokerage and you were able to save money, so you were able to manipulate the mortgages. What does that? Because I've got a finance brokerage. Could I do something like that today with the products that I've got in front of me?
The answer is you could do something like that, not quite in the same way.
Right.
It's a little bit more complicated, but it's still doable. So I still do those kind of transactions now. I do a lot of vendor finance,
right,
where I'll buy something, I put literally no money or none of my own money into the deal.
Yeah.
I do option agreements where literally just for £1 I can control the property and get the benefit. So there's still different ways that you can make money within property, just not quite as easy as it was. Literally, I could buy a property that morning that is valued at 100, but buy it for 75 or 80. I could take a mortgage the same afternoon for £80,000, get all my money out, and I've got the equity built in and the cash flow. Those were unique times.
Yeah, you can do certain creative things like that, but yeah, not quite to that extent where it's as clean cut as that. So I do want to get onto the kind of development stuff and talk about the highs and lows and the trials and tribulations and the sexiness of property development and all that and the not so sexy side of it, because I know that you're well experienced in all that. But just to stay on the finance brokerage as well, because that's something that I'm currently building, and you and I have spoken about. I asked you questions about it in the past, etc. And for anybody else that's watching it, there's a lot of finance brokers that watch this property people. What advice would you give to them? Because a lot of people are either one-person bands, or they've got small teams. I know a couple of people that have got to 20, 25, but to get to 100, that's quite a leap. Is there any magic formula or anything that they need to be looking out for? Is there any principles that they need to be considering to be able to make that leap?
Yeah, lots of principles. I still work with brokers. I still do my property and business consultancy, financial consultancy. I advise people come to me on a regular basis. If you want to scale a business, you've got to have a model. So if you look at other businesses, look at McDonald's, look at Burger King, look at other businesses that are scalable, you have to have systems and processes to make it easy. You have to have training that everybody goes through that's the same.
Yeah.
And then what is your product or service that you're offering that's better than anybody else? What's unique to you? What makes you stand out? People still come to me where they can't get mortgages from brokers. I'll package it correctly, and sometimes packaging it means 3 or 6 months preparation.
Right.
Because you don't know what you don't know, and if you don't know what you don't know, what don't you know? I know things from an underwriting perspective, as well as an investor perspective, as well as a developer perspective. That gives me a unique set of skills and tools that a lot of people don't have. When you're just arranging finance for people, and finance is not just arranging finance. People think arranging finance is about the interest rate. It isn't. It's so much more than that. So I understand it from a complete overview, which a lot of people don't have that skill.
And interesting you say, so it's about the model as well. So the what model that you had some way of, as you say, manipulating these mortgages. If another mortgage brokerage like mine or anybody else's, if they want to have an edge over their competition, they need to think about what's the model, what's the USP, why should they come to you over somebody
So let me
else?
give you some of the things that we did in our mortgage brokerage. So the first thing that we did is every single broker had to come through a 7-day intensive training course, which I ran. In addition to that, every training course was recorded. So they could play that video back over and over again, because you only take in 10% of what you hear.
Yeah.
We also had a complete training manual. Every single part of every single process that we did was documented, so they could go back to it at any time. We would have a training meeting every single Monday morning where every broker would come in and they would discuss every single client they hadn't been able to help. We'd go through every single one, or I'd go through every single one, and I would show them how to present it in a different way. Our conversion rate was extremely high based on that level of interaction and understanding. And because we gave so much training, so much information, and the focus was always on helping the client, not our commission. The commission is a byproduct of what you do. So many people focus on their commission. If you really help your client, and we did, we built portfolios for our clients where they did nothing. And that's another one of my mistakes. We made it so easy, we didn't retain some of that portfolio that we created, and we should have done. We offered such an unbelievable service. They would have willingly given us 10, 15, 20, 25% of any increase of what we created. We found it, we filled it, we rented it for them, we renovated it for them. So we offered lots and lots of different services. So we were able to attract brokers because they were recommending other brokers from other companies they knew, because we made it very easy. The other part that we made extremely easy is we had our own telesales company, which you can't have now because of regulations, where they would call and make appointments for our brokers. And our brokers had appointments every single day. It was easy. They just had to show up.
Right, yeah. And today, like, telesales is like just going through the yellow pages or the phone book at that time, and then just calling up and saying, hey...
Well, that was one of them. You know, Google advertising, paid advertising, people searching for loans, for mortgages. We'd get that lead. We'd obviously pay for the lead, but the conversion rate was quite high. When we first started, the acquisition was £3 to £5 a lead. By the time we got to the end, it was something £100 to £150 a lead. So the model changed when regulation came into effect.
Interesting. And that's the other thing that it's just a fact of life, is that if you stumble across a model that's really working, it has a lifespan. Something will happen. Either regulation comes in, a competition comes in, and the parameters change somewhat, and it's how you adapt.
I mean, I've been helping somebody that you know very well, the industry knows very, very well, been in property a very long time. Spent 2.5 years trying to sell or refinance their project. Nobody has been able to do it, but I have.
Really?
It's going through at the moment, and when it completes, I'll share who it is, and they will share who it is. But I literally can do things that a lot of people can't, because I understand it in a very different way.
Well, watch this space. We will share that name as and when the time comes. That would be very good to know. Well done. So the finance brokerage, then, you built it to 100 team members, 50 brokers. You've got all the systems, processes, the model's working. What was the lifespan of that? How many years did that go on for? And tell us about how you went about your exit.
It went on for about 10 years. I wanted to exit that particular model when regulation started coming into effect, because the cost of acquisition for the lead became very expensive. And we made our brokers too self-sufficient on the leads. What they were supposed to do was generate 50 to 70% of their own business from the leads that we created. But we made it so easy for them, they didn't do that. So the model couldn't sustain itself. And when the whole crash came, we pulled out of the actual market.
Got it.
At that time. I didn't want to put any more time or energy controlling that many brokerages. And plus I was making more money in property at that time, so I decided to move.
So was it a sale, or was it just
No, we just closed the company.
Wound it down, and you had your other investments that you were working on in the background, and you thought, okay, I'm going to push more of my effort into.
Yeah, people think property is a get-rich-quick scheme. It isn't. It's a get-rich-slowly scheme. You make money in different ways from property. So your property cash flow from your rental, it's not passive income. It's reoccurring income. And it, £200-300 of property, then, 1,000 or so per month now. That takes time for it to build, as long as you keep your debt at a certain level. So your refurbishments, that's lump sums. But when it comes to your overall property journey, you've got to have different pillars of income coming through over a period of time. And with mortgages, you get, as you know, depending on the mortgage at the time, £1,000 or £2,000 per mortgage. You've got to sell a lot of those to make a lot of money. And we did sell a lot. At our height, we're selling, in terms of commissions, 7,000 or 7 million in commissions and sales. That was quite a lot for then. We're talking, 20 odd years ago. That was a lot of commission to be generated from one brokerage. But from the property side, you can make 200,000, 300,000, 400,000 from one project. And the market, again, then is different to what it is now.
Absolutely. And it's interesting that you talk about it's not passive income, it's recurring income. I think most good business models do have that recurring income. A lot of people are talking about these SaaS prop tech or any kind of technology tools. And then you've got the twin pinch there. So you got the recurring income and the passive income. A lot of people talk about the passive income. It's a myth in property because ultimately there is no such thing as passive income. It's a tough business to be in, and there's always some kind of element of some sort of hands-on. Is that fair to say?
The dream is sold on passive income in property for sure. But when you're in property and you have property rentals, there's nothing passive about it. Every part of your property where you're renting it, going through the paperwork, checking the actual rents, all the insurances you need to put in place, the safety checks you need, there's always something that needs to be, it's not passive. Even if you have a property manager doing it for you, there's still things that you need to do as a property owner, as an investor. So it's reoccurring income. You have income that's reoccurring, but it's certainly not passive.
There was somebody that put on social media recently about the analogy of a shopkeeper, and if the shopkeeper, using the analogy of a shopkeeper and how tenants, they take, I'm going to try and verbalize this as best as I can, because there's a lot of problems in the private rented sector at the moment. Tenants have a lot of control in terms of if they don't pay their rent, they can stay on for a long period of time. That can cause a lot of problems for a lot of landlords.
Yep.
And if somebody was to walk into a restaurant and do that and eat the food for free, for example, for month on end, it probably wouldn't be necessarily accepted, and it isn't. So why do we allow it in property? And there was a lot of back and forth, and some people saying, well, it's not quite the same. Property is a safe investment; it's a recurring income. I mean, the whole thing that it's a human need is quite different because food is also a human need. But certainly, I think that the fact that it's recurring income is probably arguably one of the reasons why people find it such an attractive investment. Would that be fair to say?
People used to find it very attractive. With the rules and regulations that are coming in now, it's less attractive as a business model. And I'm selling a lot of my property because the model doesn't work how it used to do. Property is stock, just like this bottle of water. If I can't sell this, I need to find another product that I can sell and make a better margin. Property for reoccurring income was based on you getting that reoccurring income, providing good quality properties for your tenants. And you're right, there isn't any other business where if you don't pay for what you take, what you receive, the benefit that you have, you no longer have it. If you have a car and you no longer pay your lease payments on your car, you take that car away. The lease company makes money on the monthly payments. You don't pay it, they take it away. You go to a hotel, you stay for an extra night, you don't pay, they don't let you stay there. Short term, There is no other real business that I know as a comparison to property where you can be penalised so much for so long if your client, your customer, doesn't pay for what they use.
It is a bit of a shame, a crime, some might say, and it's very politicized, so we won't dive too far deep into that just for the moment, because I want to talk also about the next step of that property journey, because you actually went more heavily into development. So and this was ground up development, conversions. What was the mindset shift going from the brokerage? You've got the property portfolio in the background to thinking, okay, maybe I should be doing larger developments.
If I'm totally honest, two things: money or profit, two, ego. You think you can be much better than what you are. Didn't have all the knowledge when I first started in development. But development, you're building something from the ground upwards in a lot of cases. You're creating something, part of legacy, part of things that you can put your stamp on, your name on. So those are the reasons why I went into it. And some projects went very well, and others didn't go so well. But I learned a lot more from the projects that didn't go well than I did from the projects that did go well. That's part of the learning journey. There weren't companies out there that could help you when I first started, and I wish there were.
Like consultancies and mentorships?
Different kinds of consultancy, property companies that could hold your hand along the way. And anybody starting out, I would certainly say, make sure that you do your first few projects with somebody that's really experienced, even if you make less money. Joint venture with them, let them come on your project, get maybe a non-exec developer to help you with your project, to help you get it through. You will save way more than you pay them for doing it. And I do that a lot now.
Yeah, I think that's fair to say, that you get, no matter what that's the whole idea of the cost of the consultancy. If you pay X amount, then your saving or your return should be 10x that. So it's always a marginal cost.
Even if it's not 10x that, even if the cost is break even.
You haven't lost anything,
When you haven't lost anything, you've got a great project. The headspace that you have, the time that you save to look at other projects and make more money, I can't tell you when a project goes badly or not the way you expect it, and to have a consultant that can resolve it, that has the knowledge, experience, expertise, will be way quicker and way faster than you could do it on your own.
So let's talk about the ones that... let's talk about the ones that go well. So in terms of like one of your favorite projects that you're quite proud of that went well, do you have one in mind that you thought, that was one that I kind of liked?
There's a few projects I can talk like that. So one of them was one we didn't even build. It's a project that we bought. It was to make into effectively a storage unit. We put in for planning consent for 16,000 square feet. The planners came back and said, we won't give you 16,000 square feet, but we will give you 52,000 square feet. Never had that before, where they needed it in the actual area. And if we increased the size they'd give it, we got the increase. And we sold it with the planning lift, planning gain. And the planning didn't cost that much. We made over £1 million just on the actual flip. So that was probably one of the better ones.
Are you, because there's different types of developers as well. There's some that really love to get on site. They love to pick out kitchens and bathrooms. They love to hang doors and all that kind of stuff. And then there's some that actually just love the paper exercise of it, whereby they can add value through planning, or there's a lease extension, that sort of stuff. Are you more hands-on site, or both? But sometimes there's a bit of a leniency on one way or the other.
I'm more of a numbers person.
Yeah,
I like the numbers. If I can get in and out as quickly as possible, that's what I prefer. However, starting my life on a building site, knowing my way around a building site, if I have to get my hands dirty, and often I have, even in a really nice suit, when people don't show up, I've had to just crack on with my suit. You have to do what you have to do. So I can do both, but I prefer the paper exercise.
And so Those, I mean, those are great numbers, and that's what everybody's probably tuning in for, in a sense, to find out how and what can be done, what are the big successes, to get that inspiration. At the same time, there's the pitfalls. So when projects have gone wrong for you, what are the kind of highlight common reasons that might have gone that way?
Sometimes it's just bad luck, bad timing, or choosing the wrong building partner. So I'll tell you one more recently, which was a project that we built 9 units. The contractor we chose to start with was just delaying, and then COVID hit, which gave them more of an opportunity to delay the project. As you know, with development finance, it's expensive when you're not developing, you're not building.
Absolutely.
We had to go to adjudication. We won. They tried different bits, but we did have the right professionals protecting us, the right contract administrator. After we won, he passed away.
Oh, wow.
So now we've got a project in mid-flow. We've now got to find another contractor that will pick up from an existing contractor with all the collateral warranties. We've got development finance in the background. To cut a long story short, a development that should have taken 12 to 18 months took over 36 months. A project that should have produced over £1 million profit broke even. So not every project goes according to plan. However, that project was an award-winning project because of the design, the layout, the configuration. We use lots of professionals to help us get the best maximum layout. But that doesn't mean every project goes according to plan. Could I have done a lot more with my money? 100% during that period of time. And we had a couple of projects similar to that during that period of time. So development doesn't come without its own health and financial risk warnings.
Yeah, absolutely. I mean, the fact that you broke even, it means you've done really well. And going into development finance, just to touch on that point, and different people have got different ways of looking at this stuff. When there's LTGDVs, loan to gross development values, loan to costs, LTCs, is there when you're raising the finance, I assume that you know your way around the market and you kind of get excited, you're good at that sort of thing. Out of interest, do you use a broker or do you do it all yourself?
I use brokers, 100%.
Yeah. Because there's a lot of lenders out there for you to know them all.
Yeah, well, it's not that I don't know them all. I know how to package it correctly for the investor of how a lender wants to receive it. Nearly 99% of the time when I receive any proposal, there's so much missing from it.
Yeah.
They're not going to get the best terms, and they end up just going for whatever they can get. So my job is to get it positioned correctly so the broker can place it with the right lender.
With the right lender. And in terms of loan to gross development values, where do you like your LTGDV to sit typically? Because some people have got the idea, with the major house builders would be at 50% or sub 50% LTGDV, and then you've got a lot of developers, they like to be really high up the capital stack at 75% LTGDV and higher if they can. Is there from your experience a nice sweet spot?
It depends who the person is and how much money they've got. So if you have money in the background as a safety net, you can go high loan to value. If you don't have money in the background, you need low loan to value, because lenders only want their money back. And when things go wrong, and they often do, things don't go according to plan, time or budget, if you don't have capital reserves, you will get hurt. And most of the people I'm helping, whether before or after, especially after, they haven't got the capital reserves because they haven't accounted for the contingencies that may not happen but do.
It's such an interesting perspective, because typically what happens is the other way around. Is I don't have a lot of money in the background, therefore I want to go up maximum because I want to get this deal done, and I just put everything in, I squeeze it as much as possible. Whereas you're saying, well, actually, no, take a lower position and put maybe a little bit more in early doors, because you're going to need that little bit more headroom at the back end.
Not only that, people don't realise when you start a development, you have to have money in the background.
Yeah.
The bank always funds in arrears. If the bank is late with a payment, your contractor doesn't care where your money comes from. You have to pay them. Otherwise, you're in breach of contract. So you always have to have capital reserves. And so often I see people haven't got it. I'm speaking to a few people now. They've got development finance or they've taken bridging finance. They haven't got a clue what they're doing. They're going to get burnt. So my job is to try and help them stopping getting burnt right from the outset. Because unless you've developed, unless you really develop all the way through from start to finish, you don't know the different things that go wrong. I've had development finance, many development finance. Just because you have development finance doesn't mean the lender's going to give it to you during the project. Their rules may change during the project. Their QS may not write it for as much as the builder wants it. So there's so many different things that you need money in reserve. And that's why a lot of newbie developers fall over. They haven't got enough capital reserves to support them during difficult times.
It is a very capital intensive game, is property development. And it's not about how much money you put in, it's how much money you've got in reserve as well. The contractor that went, you said he passed away.
He passed away.
He must have been under a lot of stress.
He was doing a few free projects and he was playing the same game with us, with other developers, and we had a QS at the time that recommended him, and he didn't tell us the other projects that he was doing the same when we entered into a contract, and if he did, we wouldn't have actually engaged him.
So for anybody out there who's looking to source a contractor, what's your process? Even though you've got to experience, probably checks and balances, what is your process that you go about, and what have you learned? Well, you just mentioned there, but certainly, how can we help other people not make those same mistakes?
If I tell you all the things I use, well, people will actually come and use me. But there's a few things. So you have to work with a really experienced quantity surveyor.
Got it.
Most quantity surveyors have a team of other contractors they've worked with over a number of years, and they will tell you from their experience who are the good and bad ones. Also, when you look at a tender prices at the end might look the same. How they've got to the tender prices are not the same. And different contractors cost their build in very different ways. So, prime example, some contractors will front load their contract so they get most of the money at the beginning and leave very little at the end. So if they go bust, or they don't care. Which if you have a QS, he will make sure that each area, line by line, is costed according to QS guidelines. That's just one simple thing that you need to do. There's other checks and measures that you do that you have to check about the contractor, how long they've been in business, credit lines. There's a whole load of other things that you have to do to ensure that they will actually deliver a project. One of the companies we used was a multi award winning contractor. They had many different sites, and they went bust over the COVID period, not just on our site, on all the sites. So sometimes with all the checks that you have in place, you're just unlucky. However,
yes, exactly.
However, if you've costed it properly with your QS, you have enough money to complete the project within your budget.
Yeah.
So that's one of the safety measures.
And then even things like what happened with COVID, where the build cost started rising. I mean, no one can foresee that, right? And which goes to the fallback position, which is make sure you've got enough reserve capital in the background for those kind of unseen.
Well, two things: enough reserve capital in the background, but also you've had enough profit margin at the beginning. I see so many people where they're looking at their profit margin, which is 20% on cost or less. Not enough. Just not enough to allow for market fluctuations.
It's hard to find sites with those types of margins that are on the market with planning already. Do you take all of your sites through planning, or do you find them with planning approved and just be really selective?
So I do both, but this is another common mistake that people make. So when you find a site that's on the market, you also have to see how you can improve that existing site to increase the margin. So when you look at it, it might only be 20%. And it must be 20% on GDV, not 20% on cost. But how do you increase that by 25%? Or can you change the layout configuration? So we've often changed layouts and configurations. Just by moving the lift shaft, you can get another 10-15% of net saleable area, which now increases your profit margin. So one part is looking at the actual design. But here's a mistake that I'd say 90% of the marketplace make when they go and get planning and they negotiate with the landowner. They negotiate, so they make 20, 22%, 23% on GDV by obtaining the planning. They're mad. Why would you give somebody the benefit that's got no planning, you take all the risk of the planning, and you give them your upside, and that's crazy. Yeah. You've got to have 35, 40% margin minimum if you're getting planning, so you can sell the site and make a profit without building it. But I see time and time again that people, when they get the planning, it's still 20%. That's crazy. You've given the landowner all the benefit and you've taken all the risk. That's nuts.
And there's no guarantee you'll get that. And then what is it worth? And so you should be making a profit at each stage, whether it be the planning stage or the construction phase.
The right way to do it is to have a formula with the landowner that maintains your margin when you get planning at the end. And many people miss that and they don't know how to work out the formula.
Don't know how to work out the formula and negotiate that with the landowner, because the landowner, regardless of the site that he's got, he wants £1 million for it, and it's like, well, I can get you that, but I need to be able to achieve certain planning, and I'll try and get that because the more it's worth to you, the more it's worth to me. But negotiating that, not everybody's got the experience.
Negotiation is a massive part of how you make money, secure a deal, and how you portray that information to the landowner. If you say it the way that you are, most landowners are going to say no chance. So you've got to have a very eloquent way of how you position it so they feel it's a win-win scenario. So there's a whole technique and structure around that.
Landowners are not property people for the most part. And if they are, they'll probably be squeezing every inch of value out of it themselves anyway. There is a way to be able to communicate.
To present it, to communicate so they understand it and appreciate it.
So one of the things as well, I spend probably way too much time on social media because my wife tells me so. But there's another thing that I saw about joint ventures. I know you've had partners and stuff. And the highs and lows, you were saying before earlier, one of the good things of joint ventures is you're able to leverage experience and minimize your risk that way. What are the pitfalls? Because there are some horror stories. I mean, there's a lot of people that joke about it. People go on a property training course or one of these free one-day events, and there's 100 people there. They sit next to somebody, and then they're joint venture partners. So how would you think about building a team of partners? How do you go about that kind of thought process to identify the right people?
So most people, when they go into a joint venture, it's because they need or want the money. And if you think about a joint venture, it's like a marriage. So you wouldn't marry somebody unless you knew them, right? So you got to know them.
For the most part, that's how it goes.
You got to know them, hopefully like them, unless it's an arranged marriage and grow to like them.
Yeah, exactly.
And then you need to trust them. And that's a process. It doesn't happen overnight. There are some certain tools that you should use. So there's one of the tools that we use which is called contribution compass, which gets you to align your values with their values. Can you work together? What happens during conflict? And then when you set up the contract at the outset, and your contract, think of your contract as a prenuptial. So you plan for the worst and hope for the best. So your prenuptial is your contract. So somebody that I've worked with is my consultant. He came up with a fantastic analogy, and he said, treat anybody you're going into business with, especially a joint venture, as if they are a liar, a thief, and a cheat. Not that you would ever go into business as if they're a liar, a thief, and a cheat, but if you plan for that scenario, you'll be better protected. So again, I advise a lot of people how to set up the joint ventures correctly, the shareholders agreement, the voting rights. All of those things are an important part. And one of the comments I say often, if you think the cost of good advice is expensive, try the cost of poor advice, bad advice, or even worse, your own advice. For some reason, people will not spend or invest the money in the right professional legal structures or services to make sure it protects themselves. And I spend a lot of time trying to help people unravel the mess they've created.
And cutting corners, I think, for the most part. I do have people that come to me and they're like, oh, do I really need to get this? Do I really need to get that? And it's like, well, you don't really need to, but if you don't, there are going to be consequences, and you are increasing your risk by not doing it. And you're likely to get bitten later on down the line, but it's up to you. You want to save a couple of £1,000 here or there, that's fine. But as long as you know the risks.
It's like insurance.
Yeah.
You don't need insurance because you're not
Exactly.
expecting a fire or a theft or a crash. You have it in the event of. It's your insurance policy in case something happens. And you need to make sure that you put that in place as well. And just like divorce is over 50% in the UK, most joint ventures end in divorce by at least 50%. So if you know that is a statistic, why not get your paperwork right at the outset?
Makes complete sense. Now, if we were to talk about the biggest challenges in the UK property sector in today's market, where could we start?
Where can we start? Where should we start? It really depends where you are on your journey. If you're starting out in property, the UK is still a fantastic place to be. There's so many opportunities still to make money in property, one way or another, whether you have money or whether you don't have money. If you're a bit more progressed in your journey, as I am, there's better ways, safer ways for me to make money by looking both in the UK and internationally. So lending money for me is probably more secure for me for many different reasons. I can get to see multiple projects simultaneously. It helps me stay ahead of the marketplace.
You've got downside protection.
So there's lots of opportunities in the UK market. I wouldn't necessarily say buy-to-let is one of them. But if you're starting out, that could be a very good way for you to start out. There's many ways you could control property, lease options, rent-to-rent, short-term lets, deal sourcing. There's lots of ways you can still make money in property. Development, with the new announcement, there might be some headroom now with more certainty about planning, where you can actually now almost get guaranteed planning if it goes through for 9 units or less. Doesn't have to go to committee. That's an opportunity for developers. We need certainty. We need to know if we buy something, if we follow these guidelines, will we get planning?
Which is where you get in permitted development to a certain extent.
It's almost like permitted development for new build. So
for new build, though.
so that might help. So permitted development, it's still probably the safest place to be from office to resi. Airtight, watertight, you can get in and out much quicker, certainty of costs. So there's still opportunities, converting shops with reducing the front size, putting residential at the back. There's still opportunities out there. But for investing, for me, in particular now, I've got better and easier horizons than just the UK.
Do you mind elaborating on what that looks like?
Yeah, I've been exploring the Dubai market for the last 2 years, not just in real estate. I think people in property get tunnel vision, that it's only property. There's many other ways that you can make money and get a return, get passive income, 8, 10, 12, 14% passively, reoccurringly, not just through property. So I've been looking at a number of different things, including things like gold and silver. A lot of people don't realise that you can have reoccurring income on gold and silver.
Gold's like doubled in value over the last year or two or something.
It has, yeah.
To know. So that's a bloody good investment.
It was.
Do you get involved in any kind of these digital assets like cryptos and Bitcoin?
I don't get involved in digital. I don't invest in things I don't know or understand. But I do have family members that do and have and are very good at it.
And they're doing all right.
They're doing pretty well. But it's not a platform that I know. I do invest money that I can afford to lose in the platform. I just have what I call pound cost averaging. Every week I put money into it and it just grows. It goes up and down. I don't worry about it and I'll see what happens with it.
Yeah, you just got to have a little bit of faith that the general trajectory would be upwards. And as you say, you dollar cost average it. And
well, it's more likely to go up now because what's happening in the world right now. So if you haven't heard of CBDC,
no,
central bank digital currency.
okay.
The world is going itself into digital currency. So if you want to be more fluid, more liquid, have less control by the banks, things like Bitcoin are going to increase in value. So the governments themselves are now, you've heard, America now going through legislation to make it more legitimate. As it gets more legitimate, it'll have less fluctuation, and it will increase in value. It's a store of value. We now pay most things on credit card by tapping.
Absolutely.
It's almost digital. I don't agree with digital, by the way. I do think cash is
place,
really
yeah.
important to have. And when I go out, if I can't spend cash in a place, I won't go there.
Really, is that principle?
Yeah. If they say they only accept credit card, I won't custom there.
I agree. I mean, it's because I think it's a way of making sure that the governments don't basically take over. I was speaking to a friend yesterday who was talking about how amazing America is for having allowing armed civilians, and it's a good way of protecting against kind of rogue governments and stuff like that. And I think that the cash thing is a similar thing, in that if you suddenly make a cashless society, the level of control from a centralized government can be increased. Is that your main concern, or is it something else?
Loads more concerns.
Yeah.
So let me just do it on the basic economic value first. If I have £100 and I'll buy something from you and I give you £100, you have £100. You then take that £100 and you go to the supermarket. They have £100. They take that £100 and they go to the butcher. Same £100. However, I use my credit card. That £100 when it comes to you is £98. When it goes to the next person, it's £96 and so forth. And who makes money each time?
Oh, because they're clipping fees at the Visa and the MasterCard and the bank.
So just on an economic level, in terms of the true value of the £100 still staying the £100, cash stays as cash. Then if we talk about control, so when you have CBDC, central bank digital currency, it's programmable. It's not the same as your credit card. It's instantaneous. So they will know exactly where you are, what you're spending, what your political views are. We've already seen people go to jail for social media comments. We've already seen with Nigel Farage has his bank account closed. When the government controls your money, they will control you. If you don't want to be controlled, if you haven't woken up and you haven't heard about CBDC properly, now's the time to really understand that we're being boiled like a frog. How do you boil a frog? You put it into a cold saucepan and turn up the heat slowly. That's what's happening. They announced it 2 or 3 years ago that by 2028 to 2030, we will have central bank digital currency. Most people have no clue what it is or don't understand what it is. So, yeah, cash is important. And whatever you do, if you've heard of people like Nigel Farage, he's been banging on about it for a while. But people don't always listen to some of the sensible things that he says.
I agree. And if you had a crystal ball and you were to make a bet, neither of us are going to be around by the year 2100. But would you say that we will be in a cashless society by then? Are you saying, like, is it inevitable that this is going to happen? That eventually the generations of you and I who've had cash in our society, I mean, this is very speculative, but because are you optimistic or pessimistic about that? Out of interest.
What I'm going to say is probably going to stir a lot of emotion, but I'll say the poor people will be in a cashless society. I think the rich people, or people know about money, will have different methods of how to move money, like Bitcoin, like gold, like silver, like stores of value that they can move that won't be controlled by the governments. There'll always be a need for that. And if you don't raise your financial IQ now, you're going to be left behind.
Financial IQ, financial literacy, I'm all about that. I think that's so important. And I couldn't agree with you more. There's so many other things that we could talk about. And I haven't asked you a bunch of questions that I wanted to talk about business per se, about sales and marketing and operations, and building teams and all that sort of stuff. And I would like you to come back and talk about those things, and also tell us about a little bit, maybe a bit more digital currency, but certainly about your adventures out in Dubai and how that's all materializing and the attractions there. But for the moment, In terms of your career, which is illustrious, in my opinion, the best piece of advice that you've ever received, what would that be?
I'd say raise your financial IQ.
Yeah. Somebody told you that?
No, I learnt that myself.
Okay.
If you don't control your money, somebody else will control it for you.
That's good.
If you don't have dreams, you'll work for somebody else's dreams and create their dreams.
What's the worst bit of advice you've ever had?
Debt is bad.
Yeah, that's a good.
Because there's a difference between good debt and bad debt.
Very good. And you're obviously a successful property person. What characteristic traits do successful property people need to have to make them a success?
Resilience. Things won't always go in a straight line. You will have difficult days. Have belief. Pay. Invest for the right advice, the right information, because somebody will have that knowledge to help you get out of trouble. Believe in yourself, be consistent. Things won't always go well. Learn from your mistakes, because you will have mistakes, and you'll learn more from your mistakes than you will from your wins, and then apply those mistakes that you've learned to your next project to make more money and recoup what you've lost. Lovely.
And finally, if people want to reach out to you, what's the best way they can reach out to you for mentorship, pick your brains?
If they want any business consultancy, financial advice, they can reach out to me on LinkedIn. That's probably the easiest. I am on Facebook. I'm on Instagram. And I have my own website called emmanuelezekiel.co.uk, which is my name. But LinkedIn is probably the easiest.
And we'll make sure we've got all the links in the show notes. So Thank you very much, Immanuel. I hope you do come back and share some more knowledge and wisdom with us. And thanks again.
My pleasure. Thank you for having me.
Cheers.